Hey, what's going on, guys, and welcome to STC Investing. It's Juan here, ready to cover some great material with you guys. As always, I wish you guys a great day. Let me know in the comments below how you guys are doing for today. Hope the stock market is treating you guys well. Before we move on, just want to add that I'm not a financial expert or a licensed professional. If you plan on investing in the stock market or crypto, consult with one first and invest at your own risk. In this video, I want to share with you guys how to sell put options, also referred to as cash secured puts, on the Robinhood platform. And I also want to cover some important information with you guys that I believe everyone should know and understand when doing sell put options, what can happen and the potential risk involved. Selling put options can help you make some great consistent profits that you can reinvest and use the principle of compound interest to accelerate the growth of your investment portfolio. Or you can also sell put options for active income to use the profits you make to take care of some of your purchases, like that cup from Starbucks or some McDonald's, or even your monthly expenses altogether, guys. It's pretty crazy to think of. But before I get into that, all I would like to ask is to hit the like button down below and subscribe. It really helps out the channel, so would greatly appreciate it. So let's get right into the video. When selling put options, it's a good idea to pick a company that's stable each year. As you can see here, Apple is a super stable stock. It has nice consistent growth. Try to avoid stocks that go up and down a lot and aren't really stable when selling put options. I know Tesla is a popular stock and I like it as well, but it hasn't been super stable compared to something like Apple. So it's a good idea to avoid stocks with high volatility when doing sell put options. So now that we have the stock that we want to do a sell put option for, you just look for the trade options button. It opens up this, and Robinhood automatically has options disabled, so you might have to go into your settings and activate that feature. Doing sell put options the right way will help you be able to make nice consistent monthly income. Before selecting an option contract like these here, each one of these is an option contract that you could enter, but before you select one, make sure that your top tabs are selected correctly. For example, if you guys want to do a sell put option, you have to switch the buy to sell, select that, and then select put. So now you're looking to get a sell put option. Pretty simple so far. So next, you will select your expiration date. I would suggest to select the date that is closest to you or that is 1 week out. For example, if you're currently looking at a sell put option contract on a Monday, you can select for the expiration to be on a Friday of that same week. Why? Because typically you'll be able to do 4 sell put options in 1 month if you select expiration dates that are 1 week. By doing so, you're maximizing the amount you can make each month. So we'll go ahead and select January 29th. Coming down here, we can see that Apple's current share price is $144.80. So you can select a strike price like any of these here. By selecting one, you're saying that Apple's share price will not go lower than your strike price during any time between when you selected and the expiration date. Next, you're going to come over here to where it says price. You're looking at the 142 strike price and you're going to just select this. So it opens up like so, letting you know you selected it. Then press continue. So now it's letting you choose how many contracts would you like. We'll go ahead and put one for this example. So you're looking to get one contract. How much would it cost you in terms of collateral? Well, all you do is multiply your strike price times 100 since each contract is 100 shares. So 142 times 100 equals 14,200, which is how much you'll be fronting as collateral from your funds to enter this sell put option contract. Next, you will select your limit price, which is how much you would be getting in premium. So right here it shows 410. Let's say we go ahead and select that one. If you select the limit price that is automatically displayed, like the 410, you may get your order filled right away, or you may have to wait for it to get filled. If you want your order to be filled right away, you can lower your limit price. Right now it's 410. We could put it at 4.09 perhaps. Personally, if I don't get a quick fill, I cancel and redo the order, lowering the limit price to get the order quickly filled rather than wait. For this example, we'll go ahead and put it back at what it's showing. So next, you will select review order, and then you would go ahead and complete the order to enter this position. For myself, it's currently showing that I don't have enough collateral in my buying power to make this order. But after this, you put in the order. Once your order is filled and completed, your 14,200 of collateral is taken away from your buying power and held until expiration. In return, you get the premium, which was the limit price, which is right here what we entered, minimum credit. Since the limit price was 4.10, then that's multiplied times 100. So the total premium that you're getting is $410. This $410 is added to your buying power, and you can reinvest it or withdraw it to your bank account and do what you wish with it. $410 is pretty good for 1 week. I wouldn't even make that in 1 week. At one of my previous jobs at a restaurant, I was a server slash to-go specialist and would only make about $300 a week. Coming back to it, we'll go over 2 scenarios on how this can play out after your order is filled. One scenario is you guys smashing the like button. Just kidding, but please feel free to hit the like button if you haven't already done so. Greatly appreciate it. So looking at scenario 1, let's say you reach expiration and Apple's share price closes at $143 or higher, then congrats on that. You successfully exited your position and you get back your collateral of 14,200 back into your buying power, and you also keep the premium of $410. Scenario 2, you reach expiration or don't reach expiration, and instead you get a sign on your position because Apple's share price closed below your strike price. Perhaps it closed at 141 when your strike price was 142. So your collateral of 14,200 is taken away and you get 100 shares of Apple at an average cost of 142. Since that was your strike price, so now what about the premium? You still get to keep the premium in both scenarios. But now what? You have 100 shares of Apple at an average cost of $142 that you were forced to buy, and the current share price at expiration is 141. So you're at a loss of $1 per share, so that's $100 that you're down on your position. But remember, you had made $410 in premium. So if you sell your 100 Apple shares and accept a $100 loss, then you're still breaking a net profit of $310. That is 410 minus $100 equals 310, of course, and you exit your position. You get 14,100 back for selling your shares plus your 310 net profit premium. So you got a sign, but things still played out in your favor. Another scenario you can do is simply hold your 100 Apple shares and wait for the share price to go up, and you can sell the shares for the same cost that you acquired them. Or if you wait longer, you can sell your shares at a straight profit and perhaps collect some dividends along the way, since Apple pays out dividends every quarter, which is every 3 months. So it's a good idea to select a safe stock that you believe in and trust, that has had steady growth, and that you will be okay with owning 100 shares of that stock per one option contract, because you can get assigned to it, and it could continue dropping lower, and you might be waiting for it to recover to sell at a profit or break even. It's very rare, but some stocks may drop and perhaps never recover. So play it safe, guys. There's plenty of people that do this investing strategy pretty frequently, including myself, and all in all, it's worked out pretty well. Nevertheless, guys, if you have any questions on what I've covered so far, feel free to let me know in the comments below. And if you guys plan on using the Robinhood app, feel free to use my referral link that's down in the description, and you'll get one free stock and I'll get one as well, which is pretty sweet. Hope you enjoyed the video. Let me know what you guys think in the comments below, and I will see you guys in the next one. Peace.